Hello. Today is June 28th, 2024, and it's the end of the month and it's the end of the half year. And I hope that everybody had a good first half of the year. And we look forward to a good second half of the year. I will actually this week I'll be doing what I do every sort of 6 months, which is a portfolio review video where I talk about, show my trades that I did this year. And I really look at my statistics as the most important thing and trying to see if they are fitting within my expectations. And if not, what's going on, and doing that whole analysis, which is something I think everybody should do, which is why I do it, just so people can see how I do it. And maybe I'll help you do it for yourself. But that's for tomorrow. For today, pretty interesting market. I think it all starts with the fact, clearly it starts with the fact that we had the PCE number come out today, and it was pretty benign, you got to say. And what we had, to me, the most interesting thing was we had a massive curve steepener. You can see here that the 30-year bonds went down quite a bit today, whereas the short end, like the 2-year, was basically flat. Very big curve steepener. We had moves like back here in 30 years that were just as big, but the 2 years went with them, right? And today they didn't. And I have had this idea in my head. Look, first of all, based on positioning, you can see there's really not a lot going on in the positioning wise on the long end of the curve, whereas on the short end of the curve, like the 2 years, speculators are massively short, right? 5 years, massively short. This would imply that if positioning had to unwind, right, they would have to unwind the shorts in 2 years relative to the 30 years. So 30 years should go down more if things were going to go down. And that's what happened today. My idea has been based on something that I did a video about a couple of weeks ago, is I don't think people understand the yield curve. And they don't understand the fact that, to me, if in fact they cut rates, I think the yield curve that's what's going to get the yield curve to uninvert and go positive. Because of what that means for inflation and growth expectations on a rate cut. The short end will stick with what the Fed does because they control short rates, and the long end will start discounting in more growth and more inflation with a rate cut. So therefore, you get the yield curve going that way. And my thought was that would happen sort of as soon as they cut rates, if and when that day ever comes. But best laid plans of mice and men, the market clearly did not wait for me on that, at least not today, because we got a number that certainly made us think we are closer to a rate cut than we were before the number today. And the yield curve pretty much exploded. So I think that was the most fascinating part of today, and the most, like, look, this is the 30-year after the number came out. It went up, and then you had not very much time. It just went straight down, right? And the short end too, obviously went up, came down, but the long end way more. So I think that was the most important and interesting thing today. Now, the stock market today was not very good. The Russell clearly outperformed, which is something I've been talking about for the last couple of weeks. And I thought maybe it was about time that was to happen. And I have not said this before, but for the first time, I have been sort of thinking that this was going to be the thing. Don't know if this lasts, but it did today and a couple of days this week. The Nasdaq had a pretty tough day, right? And we can debate, is it just people reallocating money or whatever? Always possible, right? That's all it is. But we have some crosswinds going on here, because I think that it's one thing we had a number come out today. Okay, I get it. But I think that this debate last night really changed that game. And I'm not a big believer in politics having that big of an effect over longer periods of time of the market. But for shorter periods of time, certainly it does, and particularly with the election coming up and all that. And I think that the market, my feeling has been that the market is discounting in a Trump win, which means, corporate tax rates stay low and all that. If he doesn't win, then the corporate tax rates that he cut goes away. So corporate tax rates clearly staying low on the margin is more bullish than them going up. in theory. But now I think we've had a wrench thrown in that whole thing, because just my read on it, take it for what it is. This debate last night has now brought up the idea that they might replace Biden. And if they replace Biden, then I think that probably, again, on the margin, gives the Democrats a better chance of winning, depending obviously who they pick and how they handle the whole thing. But, I feel like the middle, who doesn't like any of these people, if the Democrats can come up with somebody halfway decent, the middle maybe will lean that way, because they don't like Biden because he's too old, and they don't like Trump because of his personality things. So if you put somebody halfway normal in there, maybe that pushes that way. And with the election being so close and the country so divided, that could make the difference. And I think, at least on a shorter term basis, on a net basis, that would be less bullish for the stock market. So that whole thing for the next few months is going to be sort of a shit show. But I think that's going to push it. And I think that is probably what pushed it today. This thought process. At first, the market rallied. Hey, Trump killed the debate. Biden did horribly. That was bullish. But maybe as time went on, people started to realize, like, hey, that might change the odds actually the other way. So I think that's kind of what went on with the stock market today. And there was nothing else really too exciting today. Dollar didn't do much. Something interesting in the dollar I did notice, because I'm involved in this Canadian dollar last night. The Canadian dollar was getting crushed, basically out of nowhere. It looked horrible. By the time we got to this afternoon, it was making new highs and it was looking great. And by the time we closed, it ended up basically flat on the day. So this is why I don't get involved with this. If I have a position, I don't trade around the positions. I would have been panicking out here. I would have been panicking in here, and net, it all just would have been a nightmare. I put my position on, I let it go, and what happens, happens. I can't control it, right? So that's kind of what I think went on today. The metals, interesting, I guess, was gold was the weakest metal today, but, silver was up a little bit, came off. Copper was up, but came off. But gold was kind of crap all day and was the weakest one. But, yesterday was the opposite, right? Yesterday, gold was the strongest one by far. The other metals started selling off. Yesterday, gold didn't even budge. So this is all just kind of the randomness of it all. But anyway, yeah, that's kind of what I think today. I think the big thing was the yield curve. That's the big thing to keep an eye on, and how the market is going to react to the possibility of a steeper yield curve. Clearly today, stocks didn't act well to that. But let's see what happens after this. Okay. So I hope everybody has a good weekend. Please check us out on crowdedmarketreport.com. Please check out our video this week that I'm going to do. Like I said, I'm going to do a portfolio review. Could be interesting and help you in analyzing your trading and the statistics of your trading and how that's done. And try to get some rest and try to enjoy. Okay. And we will talk again next week. Thanks.